For more on the markets is Sarat Sethi. He's managing partner at Douglas C. Lane and Associates. And Sarat, Mike's right. This is a flutter at this point, what we're watching in the markets. How do you determine if it's going to be more than that?
I mean, it's very hard to determine right now whether this is just going to dissipate or the volume is just going to increase over time. You're at an interesting time also where the market is. We've had a great last year. Earnings season is about to start. So investors were pretty skeptical about the earnings season coming into today or into the next couple of weeks. Markets at 18 times earnings. Earnings really have to show that they've caught up to the PE expansion. At this point, when you get something like what's going on in the Middle East, first thing investors are doing is cutting back their exposure, and that's natural. And our view is we're not selling into this, but we're looking for opportunities because that inevitably happens when.
So you're not buying right now either. You're fairly cautious about this.
Fairly cautious because I do think that the opportunities could come pretty fast and pretty quickly, and especially as we go.
You're talking about a pullback.
A pullback, and a pullback of high quality companies, or a pullback of sectors that shouldn't really get hurt but can. Oil goes up, transportation sector comes down. High quality airlines like United, Delta could come. They're pretty cheap now. They could get much cheaper just because that's what a lot of the investors sell.
Is the inverse of that true too? That if you see energy stocks start to pick up because oil prices are higher, that you don't really trust that either, and you wouldn't get into it?
It's a short term. We actually like energy. We've been buying it for the last year. I think what you have to stick with energy is high quality energy with really strong balance sheets. A lot of investors are picking energy without really looking at the quality of the companies. A lot of these companies have huge debt in them, so really pick your spots. But I do think if prices stay higher, a lot of the energy companies will do better down the future.
What about the really big guys like an ExxonMobil or a Chevron?
They'll move. They're more like index plays. I think if you're looking more, it's like EOG, Pioneer, and even picking like a Schlumberger. All these high quality companies. Schlumberger's got a good dividend. EOG's got a great balance sheet, one of the best leaders. Exxon, we own Chevron as well, which high quality company, 4% dividend, definitely can be in that. But if you're going to get the quote alpha, it's the other players in the energy to play with.
Mike has talked in the last couple of weeks about the momentum as we were heading into the end of the year, as we started this year, and just no matter what happened, prices seem to keep going up. This issue that we're watching right now unfold in the Middle East, is that the type of thing that puts an end to that and we see the reverse, or we just kind of wait and pause and see what happens next?
I think it's a wait and pause. I mean, what's interesting is all the news used to be on the trade issue. We used to talk about that. That's
all of a sudden China has disappeared from the headlines.
China's disappeared.
2019.
Right, but in a week, if something could, come pretty quickly.
You have the signing coming up.
You have the signing. It doesn't happen the way we wanted. Phase 2, et cetera. So there was a lot of money chasing some of these, I think, the beta momentum stocks we talked about over the last couple of weeks. Mm-hmm. That's kind of that gives me pause because it's not really chasing earnings. It's chasing just I want to be in the right names. And I think that's where kind of value comes into play this year. Financials are still cheap, but you have the Treasury pullback. So investors will also quickly look and say, where should I be? The momentum people will start selling pretty quickly. Algorithms will come in. I look at it as if you're an investor and you've had a 30% year last year, look at where your allocation is. If you've met kind of your allocation and now you're overweight, bonds really aren't giving you anything, but it's probably better to take some money off the table and kind of wait or just be in your objectives. Don't chase markets just for the sake of momentum's behind it.